Welcome on board Naresh Mirani on the show. Sampath Reddy also joins us to talk to us about the fundamentals. Naresh, I wanted to begin the conversation by asking you, the recent low that we saw on the Nifty is getting threatened today. If we do breach that mark, where next can we find support?
So starting off with Nifty, if you look at it, the lows of July, August were roughly around this 23,950 to 24,000 mark. There was a cluster of lows around that area. There was also the gap down opening which happened and it held on around those areas. That remains the most crucial support for the medium to longer term trend. Same way, we've a similar level comes for the Nifty Small 100, etc. Say 2-3% away from current prices.
So that's a trend in the markets right now. But Naresh, a follow up there. Do you expect the broader market weakening to worsen from here on?
So we are just testing the supports on the small cap and the mid cap indices. Say a couple of days back, Nifty made a bottom around this 24,600 mark. So an intraday recovery. We are finally coming in that zone as of now. But there are multiple of supports, say, in this band. So if I were to look at the Nifty small cap 100, we are at 18,100, 200. You have a bunch of supports at around 17,500 to 18,000. So that area could be tested. So that could be another 2-3% from here on before it takes a little bit of a pause. It's only when we break below those levels, then we start looking at the medium-term trend.
Take it. Sampath Reddy also joins us on the show. He's, of course, the founder and fund manager at Azurin Investment Manager. Sampath, hi, good to be speaking with you. Well, I'm guessing the portfolio is not looking a very pretty picture right now. And in fact, if you can, perhaps one should stay away from looking at the portfolios today with the kind of weakness that we are seeing. But do you expect this to be only a transient issue, or the next couple of weeks and months are going to be full of turmoil and volatility for individual investors?
I think the way the markets have moved up over the last few years, I think the overall valuations are on the higher side. Especially more so in the mid cap and small cap segment where the valuations are much more steep. Because of which I think there could be a subduedness in the market overall for the in the very near term. And even if you were to look at the quarterly numbers of the Q2, most other places the numbers are coming slightly below expectations. I think barring the companies which are exposed towards the capital markets, such as, let's say, asset management companies or brokerage companies, or companies like which are exposed to wealth management, etc. Barring these kind of companies, most other spaces, the growth rates have been quite weak. Earnings growth has been quite weak. Even IT, which was nothing to do with the domestic side of the demand side, even there also the earnings growth have also been relatively muted. So overall, with the steep growth in the earnings that we had seen in the last several quarters, I think that is getting decelerated. So because of which overall I think the valuation premium that we used to enjoy vis-a-vis most other global markets and is slightly getting compressed. So because of which I think we could see a subdued trend in the market for some more time, more so in the mid cap and small cap segment.
Markets now on intraday basis at a 2-month low actually. And Kunal, do you foresee this actually downtick continuing going ahead? Because it's been a while that we've been in this range and now it looks like the fall has just accelerated.
Yeah, I think the fall is continuing for the markets, and we've been in this tone in the last 2-3 weeks broadly. I think from September 26th, 27th onwards is where we've seen the market texture being much more negative. This is the 4th consecutive week, if I'm not wrong, where you've seen the index movement on the downside. Historically, I think when we looked at the last 20 years of data approximately for the index, there have been only 2 or 3 instances where the extent of correction has extended more than 5 weeks for the index. So maybe I think we could be probably entering a zone where the markets are getting into that final leg of correction. Today, in terms of a breakdown, yes, the indices have managed to break below that 24,750 mark, which we've been mentioning over the last 1 to 2 weeks, and that's a major support. And if we fall below that major support, then we could be looking at the index, maybe continuing the downward trend. So I think the only solace over here for the markets is the outperformance which is coming out from the individual private sector banking names, not Bank Nifty as such on an overall basis. But over the last 3-4 days, we've seen gap up openings for HDFC Bank, Axis Bank, City Union Bank today. and some strong performances from ICICI Bank. So I think in that context, maybe the private sector banking stocks, few of them, they could stand to outperform. But overall, I believe if we close below this 24,750 mark today, we could be expecting the markets to continue the selling pressure at least for the next couple of days.
Right. Let's talk about the recently listed counter, or the one that has listed today on the bourses, that is Hyundai Motor India. If you look at the stock, it's under pressure now. It is down in excess of about 6% or so. 7% is the downtick that this particular counter is actually noticing. And Sampath, have you actually covered this particular stock while you were actually trying to understand or analyze the IPO of Hyundai India?
No, we have not really looked at that. We are just in the midst of, fundraising, and, we are busy with those activities. But overall, to speak, in terms of valuations as such, even in the automobile side, the overall growth rates are slowing down, especially in the passenger car side. Inventory buildup has been quite large. So because of which I think, even automobile as a sector, facing through a little bit of a slowdown. So because of that, I guess, the markets are a little bit weak. Bit of a week.
In fact, the auto sector has been seeing some sort of a slowdown over the last 4 to 5 months or so. In fact, we spoke to the management right after their listing to understand about the outlook going ahead, and they seem to be pretty optimistic when you talk about the SUV market as well as their new Creta EV that they are looking to launch. Let's hear out from the management itself.
Creta EV is going to be launched in the next quarter, followed by 3 more EVs in the mass and the mass premium segment. This EV plan is being, also being backed by a very strong localization. So as we speak today, the battery packs are being localized in Tamil Nadu. Going forward, we are looking at LFP cell manufacturing with a local Indian partner. We are looking at powertrain, drivetrain and power electronics as well. Also the charging infrastructure, so which will again be a growth driver moving forward. At the Q1 financial year 24-25, which are already a part of the RHP, already include the higher royalty rate. So I think this is something which I just want to clarify. So Q1 financial year 24-25, which is April to June period, financial year 24-25, it includes the higher royalty rate.
All right, so you have the management talking about the fact of the demand, how the demand is looking like. Also, he also touched upon the royalty that the company pays to the parent. But coming to you actually, Naresh, and trying to understand what exactly is happening when you talk about the real estate sector, because for a while now, this sector has actually been underperforming. In the last 1 month also, the sector has not been doing that great. Today, it's down about 3.6%. Where do you think the realty sector is headed from here on? And are you finding any safe pockets in that particular space?
So over the last 2 years, the sector has done really well. We've gone through a phase of consolidation in some of the names, and some of the names are topping out. So out here, it's too early to call the bottom. So something like a DLF might just be breaking below 800, and then it creates a bigger downtrend. So out here, would wait out, let the correction get over, and then maybe look at real estate, because they're high beta names. So once the Nifty bottoms out, then maybe one can look at real estate sector. And this has been a sector which has done really well for the last 2 years. And we've seen in the current correction, the sectors which have done really well in the last 2 years have taken the largest hit. So would wait out for a deeper correction to actually participate.
Well, the market mood continues to be a bit sour, though we have managed to retrace the mark of just around that 25,000. Actually, no, we are still at 24,557 as far as the market is concerned. So a fresh 2-month low is what we have made for ourselves, and there's no buying in sight. As of now, we continue to drift lower. Sampath, what would be that trigger that will make even FIIs and even those retail and the HNIs to come back into the market? Is it just the valuations that need to correct, and that time-wise correction is something that we'll have to suffer through? Or is it about earnings or something else?
Yeah, as I was mentioning, I think earnings also for the slightly coming quite weaker in the Q2, barring few sectors. Most of the places, earnings are coming below expectation. In fact, some of the, the BFSI space where the earnings were supposed to be quite robust, there also, there's been a slight disappointment. Overall, I think earnings is, coming as a bit of a disappointment. On the other hand, the valuations are also quite stretched. So because of these two factors, I think we are, seeing this correction. And moreover, this time is coinciding with the large amount of fundraising, whether it is from the IPOs or whether it is from the QIP and FPOs. All of them taking together is absorbing a lot of liquidity, from the market. All of these three factors taking together, I think, is leading to some kind of a correction, which is what we are witnessing today. Probably this trend could, can continue for, maybe a couple of quarters more. By the time, we could see the either, earnings, bottoming out and coming back in a growth accelerating mode, or by that time, some amount of time correction would have taken place such that, valuation look, better. I think all of these factors taking together, we could see, revival in the market slightly, closer to the end of this financial year.
Right. Sampath, I wanted to actually come back to you and try and understand which space or the pockets in the market that are looking safe at this point in time, given the fact that you're seeing carnage across the board. Like you said, the earnings are also disappointed, and that also is weighing on the markets. So any pockets that you're finding safe at this point in time, apart from the ones that are linked to the markets?
This, last 2-3 year bull market, I think, most of the sectors have participated in this rally. It's pretty much one of the broadest rally that we had seen in the last several, years, I would say. So because of that, almost, most of the sectors are trading at a quite richly valued. But, if you see, there are still a few pockets where you could, find value. I think the private banks, they have not really, gone up so much in the last few years. And also the earnings have grown, book values have grown in the last couple of years, and, they have broadly underperformed. I think barring ICICI Bank, most of the private sector banks have, had a subdued performance in the last 1 to 2 years. I think that space looks, relatively, more attractive, private banks. Apart from that, I think, pharmaceuticals as such is also looking quite attractive, especially, the generic pharmaceutical exporters, where, the pricing pressure are easing now. I think that segment is also looking good. In the consumer, I think, the QSR as a sector, has been, facing quite a bit headwinds in terms of demand growth. But, this we believe is the temporary challenges. I think they have a very good long-term potential in terms of growth-wise. QSR also from a very long-term perspective, they are looking quite attractive. Like that, we can find us, small pockets of, the value in the market. But broadly speaking, most sectors are on the slightly, richly valued.
Okay, so that's a view coming in as far as the market mood is concerned, and the pockets which are still looking a bit interesting. But you know what, of course, cement as a pack has seen quite a bit of consolidation. This morning there was that news that Ambuja has taken over Orient Cement, or at least looking at acquiring stake in that one. We did get an exclusive chat with the management at CK Birla, Mr. Hariharan, talking about the rationale of the deal and what could be the prospect of the group going forward. Here out a slice of that conversation.
They want to expand. So obviously I'm expecting that the expansion plan that we are already started will continue in full swing. So that is obviously looking for value creation opportunities for them as well. And there is enough and more in the asset to do that. And with combining their capabilities, I think this is a great platform to build for the asset and for them as well. Our capital allocation strategy is to continue to invest in the businesses that I had mentioned already. And we have already been doing this over the last few years in terms of the investment. So if you see other businesses of the group, we have been both organically and inorganically growing both within and outside India. So this will only go to help us accelerate that strategy. We are a $3 billion group now. Our vision is to double that in the next 5 years, but more importantly, to triple value creation. I think we have done a good job so far over the last few years in terms of improving value, but the real opportunity is also moving forward. And we have an ambition of also expanding globally. And this will only help us accelerate that strategy as a group.
All right, so that's the exclusive conversation that we have with CK Birla Group. But Sampath, coming to you and talking about the cement space as a whole, because we've seen a lot of consolidation take place in that particular segment. You have the India Cements, now you have Orient Cement. How are you looking at the cement space as a whole fundamentally as well?
Just cement and as well as even other sectors, we have a great quality companies and most manufacturing companies and also today a lot less leveraged. So in that sense, company fundamentals across the market are quite good. Even the growth potential is also quite good. It's just the valuation is a concern for the for the investors, I would think. So it's just that we need some amount of maybe time correction or a little bit of the acceleration in earnings we need to see. I think once that happens again, we could come back in a good growth path from a returns perspective. It is the same is the case with cement sector also. I think the companies are good. The growth potential is quite good. Most companies are a lot less leveraged, I would say. Lot of companies are sitting in a cash with a healthy balance sheet. I think the concern is just only on the valuation side.
Valuation is a bit of a concern, and yes, that's the view coming in. Kunal, let me ask you about a couple of these result reactions that we are seeing. Paytm, of course, under pressure, and the other one that we are watching out for is Zomato. Would you recommend any positioning on that one ahead of the earnings?
So I think Paytm could be a decent bet, at least looking at the charts relatively, because the stock over the last 1 week, 10 days has been a lot more sideways. I think 675 approximately was the low the stock had made over the last 2 days or so. So I think at current levels, the risk reward could be a bit positive. But the markets have been such that if the results have been disappointing, we've seen the stocks getting punished quite severely. We've seen 10% to 15% correction also for stocks, even if it's a larger cap name. So I think one has to be wary of that kind of a data point. Zomato, the only concern for the charts when I look at it on a daily time frame is that the stock has now come back towards a previous major swing low, as well as broken below the 50-day moving average. So maybe there could be some bit of more pressure on the stock over the near term. I think only if we see a scale past about the 274 mark for Zomato, which is the previous swing high of the 50-day moving average, that could be a point where one could look to buy the stock.
Right, as you can see on your screen, markets now are at the day's lowest point. You only have 2 stocks on the Nifty that are gaining. There's ICICI Bank as well as Nestle. Nestle is just a tad bit shade of green at this point in time. You have the broader markets. That's the one that's actually seeing sharper cuts when you compare it to the benchmark indices. You have broader markets that are seeing cuts in excess of about 2%. That's for your mid-cap index, and your small-cap index is seeing cuts of about 3.6% at this point in time. Naresh, coming to you, I wanted to understand what's your view coming in on all of these metal counters, because you saw all of them rally in sync with what was exactly happening in China with the entire stimulus blitz. But that sort of a recovery or sort of a rally has now taken a back seat.
So in terms of metals, the preference continues to remain for the aluminium stocks, given the fact that base aluminium prices are holding up well. So you have aluminium prices sustaining about the 2500 to 2600 mark for the last many weeks. Then you have alumina, which has crossed into 630 mark. So out there, Nalco and Hindalco remain buy on dips. In terms of steel, we are seeing varied movements across the board. So would wait it out over there. Tata Steel, given that it is corrected well, could be the only bet where the risk reward is in favor. But I would still go with Hindalco and Nalco as the only play.
Okay, point taken. Thanks so much for joining us today, Sampath, with that quick take on the markets. But in the meantime, before we head into the break, let me take the top, trades coming in from our chartists. Kunal, what's the recommendation? Is there any trade or just stay away from the markets right now?
I think, frankly, it should be a no trade zone. But just looking at the strength from the banking stocks, ICICI Bank is something which still looks sturdy. The last 6-7 days, the stock has been holding on to the key support of 1230, 1235. So I think that could be a trailing stop loss for short-term traders. And I think at current levels, the stock has been extremely strong in the private sector banking names. So we'd go with a buy stance on ICICI Bank.
All right, so that's the take coming in on ICICI Bank, given the fact that it is holding the only one that's holding fort at this point in time when you talk on Nifty. Naresh, what's your closing trade?
So again, a defensive bet which has been holding on, that is Dr. Reddy's around this 70, 66, 80 mark. Looks like a case where it could eventually break out.
Break out. Let's see if that's the word we can use today or not, because otherwise it's a breakdown that we have at our hands, and we are staring at a 1% cut on the Nifty, just around the 24,500. And if the next 30 minutes pan out the way the rest of the day has, we are in for the volatile 30 minutes. In fact, we're at 24,510, slipping into a short break, hoping that we'll stay above 500 when we come back.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.